One of my members asked, which one is the better stock to buy, Meta Platforms or Nvidia? And I thought that was a really interesting question since I have Nvidia and Meta rated as two of my top stocks to buy. But in this video, I'll answer which one I think is a better buy. I'll compare these two on revenue, on profit margins, on return on invested capital, and I'll look at the forward price to earnings ratio for valuation purposes. And I'll also compare two discounted cash flow valuation models, one for NVIDIA and one for Meta Platforms, bring it all together and answer which one I think is the better stock to buy right now. That's a lot to cover in a short video, so let's jump right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So let's start with revenue growth over the last decade. What you notice is volatility to be sure, but in recent years, Nvidia has surpassed Meta Platforms considerably on revenue growth, in fact, delivering several consecutive quarters where it grew revenue by over 200%. That's how incredible Nvidia's surge in sales has been since the AI boom took hold. Meta Platforms has been doing well for itself. 18.62% revenue growth in the latest quarter was among the best of ad-supported companies, and the company dominates the social media space with over 3 billion monthly active users. Competitive advantages are strong for both Nvidia and Meta Platforms. I suspect these two companies will continue generating solid revenue growth for several more years, perhaps several more decades in the future. The next metric I wanted to compare these two on is operating profit margin. And for between 2015 and 2022, Meta Platforms had the lead in this metric, exceeding Nvidia's operating profitability. But in the last 2 years, Nvidia's profit margin has exploded along with the revenue increase. That's what made this surge for Nvidia that much more impressive. It wasn't just revenue that was exploding, but also profitability. That's more difficult to do, to have this kind of surge in revenue and profitability. It really underscores the strong organic demand for its products. It's selling them at top tier prices, and it's still selling out for everything that it's selling. Meta Platforms, I love the user-generated content business model. Meta Platforms has 3 billion users, as I highlighted, and those 3 billion users are engaging and making comments and hitting the like button and etc. And those interactions increase engagement, which makes it more appealing to marketers to show their advertisements on the platform, trying to influence the purchasing decisions of those 3 billion people. Marketers covet access to such a large user base on one platform. And so these two companies, I expect their profitability will continue to be excellent. I do expect the margin here to narrow. Nvidia is at 63% while Meta is at 40%. I expect Meta's margins to improve, and I expect Nvidia's margins to contract as competition comes in, as demand for its products cools down slightly. Not this year for sure, probably not next year, but maybe starting in 2026, demand for Nvidia's products won't be as robust as it is today, given that the update and upgrades of all these AI data centers may take hold, may be exhausted over the next 2 or 3 years. And then what NVIDIA will have access to is a strong replacement market. Those data centers that were put down in 2022 and 2023 and 2024, they'll need to be upgraded and updated maybe in 2030, maybe in 2032. And so it'll have a big installed base where it can sell services, maintenance, and replacements to, and that will boost revenue until there's the next catalyst, which I suspect will be somewhere in either healthcare or in driverless car technology, which will be the next boom for NVIDIA's business going forward. Return on invested capital demonstrates a similar story, how NVIDIA has just separated itself from Meta Platforms. 107% return on invested capital is absolutely incredible. It makes Meta Platforms look bad, but 32% is a really good return on invested capital. All right, let's start to look at valuation now. Nvidia is trading at a forward PE of 32, while Meta is trading at a forward PE of 24.5. So Nvidia stock is about 33% more expensive than Meta stock according to this valuation metric. Let's also look at the discounted cash flow valuation models that I've done for these two companies. So maybe you saw my discounted cash flow video for Nvidia and maybe you didn't. This was on November 11th when I created this, and it was probably published maybe a day or two after I created this model. So my intrinsic value per share for Nvidia stock has it at $314 per share. The current market price is only $142 per share. So my intrinsic value for Nvidia stock has the company incredibly undervalued. A similar discounted cash flow valuation model for Meta Platform stock, which was done on October 8th, 2024, has the intrinsic value per share at $590 per share, and the current market price is $622 per share. So I don't see the same undervaluation according to the discounted cash flow valuation model for Meta as I do for Nvidia. For Nvidia, when I look at the forward PE ratio, it signals undervaluation. When I look at the discounted cash flow model, it signals undervaluation. So I'm getting the same story across those two valuation metrics. With Meta Platforms, when I look at the forward PE ratio, I'm looking at something that demonstrates that it's undervalued meaningfully. But when I look at the discounted cash flow model, it signals it's more of in line with being fairly priced rather than undervalued. So I'm getting a bit of a mixed story with Meta when I'm looking at the valuation metrics. Regardless, I think Meta is an excellent business and I have it rated as one of my top stocks to buy. Nvidia as well, I have it rated as one of my top stocks to buy. Coming back here to the forward price to earnings and making a conclusion, these two are excellent businesses, as I've demonstrated with their financial metrics. But beyond the financial metrics, looking qualitatively at the businesses, they have strong competitive advantages. Nvidia has built these over decades, and so has Meta Platforms. It will be difficult for any competitor to take any meaningful market share away from these two giants. But if I had to pick only one of them, if I could only buy one of them, the one I would pick would be Nvidia. I think Nvidia's valuation, looking at the forward PE, is only 33% more expensive, but it's demonstrated that it's worth that premium price. And then looking at the discounted cash flow valuation, the spread there between the stock price and my intrinsic value is much more positive for Nvidia. All that being said, I would choose Nvidia as the better stock to buy between these two. Once again, thank you again for making this request, and thank you for joining as a member. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.